Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day. As always, today we're going to be taking a look at Snapchat. Snapchat was down 28.21% after they reported earnings on Friday, and those earnings were below expectations. So they were actually already tapered expectations on sales growth, and even then they weren't really up to snuff. So if we actually take a look at some of the key metrics or issues, we're going to look at the investor deck presentation that was provided to us. We did have a Q3 sales miss, like I said, and the company again fell by 28%. Now, we see that the ad business is still growing at around 9% year over year, which is not where we want to see this company be growing at, because this is still at its growth stage, so to speak. And then this is important when we discuss, for example, some of the movements that the company's been doing as far as what they've been doing with their cash flows, which I don't really agree with. Again, we're going to talk about that and the different markets that they're targeting. So with that being said, let's first get into the investor deck presentation. And we're going to start here at the top and show you guys the daily active users. So there's about 363 million daily active users on average. That's a keyword, on average. Now, we do see that North America has been pretty much flat. They finally hit at that number of 100 million right there. And Europe being a growing market and rest of the world being a much faster growing market. So why is this important to kind of break down? Well, North America is going to have the highest ARPU. That name is going to come back again. ARPU stands for average revenue per user. Very important metric to keep in mind when we're looking at a user-based system, something similar to Snapchat, even Dropbox, Facebook, or Meta in this case, and others. So average revenue per user is going to be pretty small for this company. It's in its early stages, but when I say early, I'm going to put quotations around that because there are a lot of questions, things they have to prove for us as investors. I'm not an investor, but if I was a prospective investor, they'd have to prove some things to me. Now, they are still growing, and there are some key parts about Snapchat that we're going to discuss, but taking a look again at the breakdown, this is the penetration, so to speak. So they do this by the denominator being smartphones. There's 400 million smartphones in North America, where that includes United States, Canada. They have 25% penetration, and in Europe they have 16% penetration, and then rest of the world they have 7%. So you can see why that one's the fastest growing, highest potential market size, but not in terms of dollar figure. Okay, we'll get to that again when we get to the ARPU figure. But some key points: they have 40 local languages, etc., all that jazz, and local partnerships. And we're going to start to see this is the breakdown of like their time frame. They have their acquisitions posted here somewhere, but I want to kind of make sure I cover everything with you guys. So they have the chat function, which is what a lot of younger people use it for, and they do have a demographic breakdown somewhere around here. Because it's important to kind of visualize that and see, okay, well, what kind of target are they really going for? So they're really trying to focus on really getting that age group that's 90% 13 to 24-year-olds, 75% are 13 to 34-year-old of the population. That's how much they reach, so to speak. So it's very much the younger portion of the population, and you might know them for, again, their snap features like the camera, the chat features, and they have this three-tiered process. They have the developers, the publishers, and the creators. So these different groups are very important for Snapchat as an ecosystem, right? The creators create the content that caused me to want to go there. Aside from, maybe your friends that are using it and you want to talk to them, then there's the publishers who produce content in the form of news, and you might see that in the news part of the app. And then they also have developers. The developers actually come, and you can see that the games, they actually promote creation of a lot of different games that you can play on the app, which is actually kind of interesting. Now, Snapchat was one of the first movers in the augmented reality space. You might know for them for their filters and Snap Stories as well. For people to kind of just post and have fun with that. So they do have an augmented reality creator platform, allows you to do stuff like this, which is kind of a gimmick and kind of, I guess, funny for some people. And also think of it from the advertising perspective. Okay, well, I can put a couch in my room and see what it looks like. I can put furniture elsewhere and see what that looks like. And so that can lead to a potential sale. I can maybe try on clothes that are, I don't have in front of me, but I can see what it looks like, this certain outfit, and maybe I can think about buying it. So these are all good things. We're going to talk about the bad, but those are just some good things to just, start with. Now, they do have a gifting platform. I did mention this when we talked about Meta, how the potential for Instagram, where they're going, and WhatsApp as well, to kind of monetize it further, is to kind of make it into like a mini bank, kind of like a Venmo, the quickest way for you guys to compare it. Well, Snapchat is also in a good position to kind of go around the same place. The creator marketplace can, again, create good process for consumers to kind of begin to purchase things for their creators, and as well as kind of sending money to their friends via the platform. These are all different ways that they could, again, bring further uses to their platform. So they have the tools, monetization opportunities, gifting, creator marketplace, creator fund, spotlight challenge, etc. So do you want to have the creator fund? Because again, that incentivizes people to create content on your platform. Very much how YouTube, you watch this video, I get AdSense, and you go on TikTok, they also have a breakdown. But TikTok and Snapchat, all these things, they're not all created equal, which we'll get to, because that actually ends up being how effective the advertisement is. Because they're going to say something, this is the sales pitch. So they have the creative kit, the sticker kit, the login kit. And this again is for their developer partners, et cetera, their partnership program. Meet the Snapchat generation, so that you can kind of pause here and read that. I won't really go into this. And this is again kind of breaking down that demographic, that key demo for them. Not the entire demographic or age group is the same value as the others, but there are different parts that are the most valuable. And you want to kind of capture the consumer, the potential consumer at these key moments in time, because they're going to be a bit more, consumptive. I made up a word there, but they're going to consume more. And so we want to pay attention to how they're, achieving that. And then they have deep domain expertise in key enterprise verticals. Okay, buzzwords there. But this is what I want to break down. So if you're kind of in the ad space, you're looking at this. So global-based bidding objectives. So they have different metrics here that we can look at: impressions, pixel sign-up, in-app purchases. These are all things that they're hopefully improving. And on the flywheel effect, so to speak, again, buzzword there, flywheel effect, they basically, I'll break it down in English. More people go on, the more people want to potentially advertise, but also kind of mixing in with that, the more interactive their platform is, along with how many people are on there, makes it more attractive to advertise. And then hopefully that translates better to sales to their customers, which are the people wanting to advertise on it, and as well as the creators. And then that causes, again, maybe more content, more stuff for people to watch, and therefore more people want to come on and on and on. So kind of going on from there, we kind of see the ARPU measure that I told you guys about. So we do see the ARPU for Snapchat is still pretty low compared to other competitors. Now this, it has, you could look at it as, okay, there's a lot of room to grow, but also kind of think about the difficulty of the platform as a whole. This company has struggled with increasing its ARPU because of the effectiveness of translating to sales. So this is all a bidding system, and companies like Snapchat, companies like TikTok, they're having a bit of a problem in terms of finding ways to really monetize the platform to be effective for their customers, which are the companies that want to advertise. Remember, you're the product on these platforms. So going over this, they have a 2% US digital ad market and reaches nearly half of the US smartphone users. So basically what this is telling me right there, this is not even a good thing. I see it as like, okay, they have potential to become more effective. They're already hugely penetrative in the market itself, but no one's paying them for the ads because they're probably not that effective, which is a bit of a problem. And this is where I'd kind of say any of you out there who are working, because I know there's actually a couple of you who work in the digital ads space who follow this channel. If you want to, you don't have to. I don't want to make it seem like, obviously you don't have to. But if you comment down below, let me know, how is Snapchat doing in this space? Are they becoming more effective, or they kind of looked at as the one that, you don't really need to go to, or, oh, you have extra money, you might as well throw it into Snapchat, but you want to use it more effectively on other platforms. I'd love to hear that from you guys. Okay, so kind of going over this, they have the tailwinds for the company, which is the shift to digital. We know this, but they're not the only one in this. We have Alphabet, we have Meta, we have other companies, even Amazon. And then we have the shift to mobile, the shift to video. Okay, again, they're not the only ones in this space, so tailwinds are not just for them. And this kind of makes it I'd say, okay, you have tailwinds, but how effective are you going to capture that? And they only control right now 2%. So maybe rising tide will lift all boats effect. I don't know. Will they take market share from the others? I don't know. We'll have to kind of be paying attention to that if you're kind of a prospective investor. And then they have, okay, creation, backend, lens cloud, spectacles. They were considered a camera company for a while, a technology camera company, kind of like GoPro, but not like GoPro. And then this is their time frame of acquisition. So you can kind of see what it is that they're acquiring, a lot of stuff with imagery, AI, artificial intelligence, augmented reality, all that. So from here, I'm going to take you over, and we're going to basically make this a decently short video, I guess. But one of the things that I wanted to cover is going over to the actual financials from the company itself and taking a look at the statement of cash flows. We do see that the line item of stock-based compensation sitting at about $342 million, and for the 9 months ended on September 30th, 2022, $937 million. So if we take a look down at the actual net income, we can kind of see where a lot of that is actually coming. A lot of expenses in cash-based compensation, or sorry, not cash, stock-based compensation. And so that's a real expense. Anyone who tells you that's not a real expense is just kidding themselves. Kind of just ignore them at that point. But if we look at the other form and we see how much they're actually spending on stock buybacks or purchase, right, or repurchase of common stock, they're for some reason they feel like it's a good idea, right, to repurchase shares at these prices. They say they spend about $500 million this year, which to me makes no sense. I can't really explain it to you guys why it is that they're feeling at this stage it is time to return capital to shareholders in the form of stock buybacks. They're not at that stage, in my opinion. I feel like they should wait more to improve the business and then make a justification for return of capital to shareholders. So I don't agree with that capital allocation strategy. And for that reason alone, right now I'd be skeptical as to building even a position, even if the prices looked good, because I don't agree with their capital allocation strategy. And I think it makes sense, right? If you don't agree with what management's doing with the company, well, maybe you should change your mind. All right. Or maybe you should not be involved in it. You have a choice. You don't have to be involved with this company. You don't have to invest in it. Now, it could be a fantastic investment, right? But if you personally don't agree with what management's doing, why would you be involved with it, right? This is if you're trying to take an active approach, not just indexing. So if we take a look at some of the assumptions I have done. So I'll go over to this part right here. So if we take a look at some of the assumptions I've already plugged in, we've actually kind of gotten... Okay, so I was just putting in some assumptions here and kind of coming up and seeing what I would kind of see over the next couple years. And I am assuming some dilution, of course. I think that that's the best way for them to raise capital at the present moment in time. I don't think they're going to get really good rates on the debt markets. Now, putting in some of these growth rates from hyper pessimistic to kind of very optimistic. You can see the very optimistic scenario. It's actually looking interesting. And we're assuming that they can kind of get to the profitability, cash flow profitability at around year 6. I can extend that out, for example, and put, for example, year 8 or more. So kind of in the range of year 6, year 8. So it looks like scenario 5 is the one I kind of want, but that's a huge difference. So if I were to say, let's see if I can put a 20%, well, not really there. And remember, they grew 9% year over year. Of course, tough comps, and we're heading into a recession. Well, we're already in a recession. So in a recession, I talked to you guys in the group about this, but in a recession, you're going to see a bit more concentration into the most effective forms of advertisement, and kind of you're going to see the customers in this case being the advertisers, are going to leave behind the less effective forms of advertising, kind of focusing and funneling that money into the best ones. So these kinds of companies, the ones that are on the edges, are going to benefit when there's more money to go around, when there's plenty of money to go around, and that's why I believe the market is punishing this company. And you have to keep that in mind. So as far as my interest in this company, I'm not going to buy this, but let me know down in the comment section, what do you guys think? Are you guys going to be buying this, thinking about buying it, waiting, or not interested at all? And then I'll let you guys know on, or the question, there is a company that I have recently turned positive on, or more positive on, that I was previously negative. I'll love to hear your guesses down in the comment section below. So if you were on the call, don't spoil it. So you know who you are. But if you weren't on the call or just on YouTube or anything, just go ahead and guess. You can kind of see from the videos I've posted in the past, ones I've been quite negative on that might have changed my mind on, and you'll see in the video when it comes out. With that being said, if you like this video, go ahead and feel free to leave a like. And if you're not subscribed, go ahead and think about subscribing if you want more content like this. Otherwise, I'll see you guys in the next one. Bye.